Hi, this is Randy Finney with Right Side of the Chart, and this is a midday market update for Tuesday, June 4th, 2019. I'm going to make this video quick because I want to get it out to you guys. I just posted in the trading room that we've hit some levels where I think we're going to get a pullback here now. We've got a nice lift so far today. Those divergences are certainly starting to play out. They can certainly continue to play out. Um, mm, I think it's enough for today is what I'm getting at right now. I'm just looking very near term. So again, get this video out to you guys, and if we pull back and power back up again, there's still the potential for more upside this week. I wanted to say that. So this is more of a micro call right now, and we'll see how the day closes. I'd like to see how much profit taking comes in right now in this bounce. But so far, it's one of the bigger bounces we've had in a while. Here's the NQ. If you look in the bottom right-hand corner, Nasdaq 100 E-mini futures up 2% on the day, and let me look at another monitor. QQQ is up 2.26. Remember, the futures they open. Their opening days or opening time is different. So anyways, that's a nice lift, but here's the point. We are at resistance right now. Doesn't mean we can't go through there. We've already had one reaction roughly around, well, it was a minor reaction earlier today. But there it is. There's that gap. There's that level we failed at last night. We had a minor downtrend line here that was taken out, but this level right here, remember yesterday morning, so there's the weekend gap when the futures opened Sunday night. We popped up this morning, yesterday, I'm sorry, and I covered that. That's where we failed at the earliest, shallowest resistance level, had the big sell-off. So now we've taken it out. And so you might say, well, Randy, yeah, we just took out resistance. Yes and no. Number one, this is what I call a momentum-fueled overshoot. That's a strong advance, a nearly vertical rally to get there. So it's almost to be expected that it's taken out. But then also I say this, even though I've been trading two things, several things, but of the indexes, NQ and RTY. And however, as I always say, I never trade any one index or one stock, especially the indexes, in a vacuum, meaning I'll look at the other charts. So here's ES. These are the S&P 500 E-mini futures. A lot of traders like the ES. They trade the S. Some traders trade the Dow. But what happens here is this is at 280 level. Somebody asked me today if they think 280, it's a level on SPY. I'll get to in a second. It's that level I harped on before. If we're likely to get a reaction or a pullback there. And I said, yeah, I think that's very likely. There's going to be a lot of eyes watching this. Now, sometimes the market will surprise you, and if too many eyes are on one level, you're going to do one of two things usually. You're going to either reverse just shy, which is where I'm going here. We are a little shy of that now and again, right now it says 27.99.48. Call that 2800. In fact, let me clean that line up. Well, we'll do that later. Round it up. That's 2800 on the ES, the S&P 500 E-mini futures. And again, a lot of eyes are looking at that level, undoubtedly. A lot of eyes are looking at the trend line above it. However, there's a lot of trapped longs. Nothing. I'm not going to say nothing's changed in the last few days. This is, so far a potentially bullish development here. But remember, this has been a relentless market pounding the longs that, or anybody that's bought a dip and just continue to, any pop has been met with a lot of selling. And eventually, all things change. All trends, just like this uptrend was relentless to the upside. Now you have one that's relentless to the downside. That's this market. So two things. Number one, yeah, the trend is your friend. Blah blah blah. I've heard that said 100 times. But I'm not a trend chaser. I like to position for trend changes, and you can recognize a trend. This one may end soon, but there's just, like I've been saying, so much damage done on the longer term charts that I'm skeptical of how far this bounce goes. So, I'll get in there and I'll trade these. When I see the futures holding up this morning like they were, I'll jump back in and may be out by the close, may take something home overnight. Let's see. I just wanted to kind of get this again out to you guys and show you it's a big level. So while I think there's a good chance that the sellers will step in a bit early, we've already had a little bit of reversal, but we're still right there. So again, hopefully I can get out to you in time. They could continue to ramp it up. There's probably a lot of shorts trapped in this market, that especially today, now want out. And there's probably a lot of, I like to call them Johnny-come-lately shorts. Those that didn't want to short here on the trend line break or any other reason, when we had sell signals here, but now they're wanting to short. And that's, again, I still think the risk reward is not favorable, even after today's bounce. Well, let me take that back. Let me put a little more thought into that. I'm kind of all over the place for the intermediate term time frame. I'll have to give you some other levels, but probably a bit too early for swing shorts because what I think might happen, maybe we get a pullback here. I know that would look like a little inverse head and shoulders pattern. That's just one of many potential scenarios. Head and shoulders and IHS patterns, inverse head and shoulders, they are supposed to occur on longer term time frame, daily or even weekly charts. They should span weeks, if not months. But I will say this, I've been trading long enough. I've seen a lot of traders post these. In some of these patterns become a self-fulfilling prophecy. If a lot of traders are watching it, and it may play out as such. So what you look for again is a pullback here. That was a resistance today. Remember 27.65 from this morning was taken out. So that's a logical place if we do get a pullback for the dip buyers to step in. Then you could have another thrust up here, and what's nice is that would then set up that neckline right there, that 2800 level. A neckline is the top of an inverse head and shoulders bottoming pattern, and then you'd have whether that pattern is valid or not, it's moot, because at that point you would have intersecting resistance levels, both 2800 and the downtrend line, and that could create a powerful buy signal if popped, and then run us up here to my next target there, about 2840 or so. So there's a level. There's some things to look for. You know, if there's enough short covering rally, if there's enough dip buyers stepping in now that want to buy Intel and Facebook and Amazon and Alphabet, everything that went on sale yesterday, so to speak, then maybe we can power through here. But again, it's about risk reward and the odds. So like I said, I just took profits. I actually reversed to small short positions, which I'll add to if I can see something going on here. And yeah, I don't want to say I'm not too worried about a continued advance and pop over there, because you can never say that in trading. It is certainly possible. I've seen the market go up a lot more than 2% in one day, but let's just say that I think the upside for the remainder today is relatively limited unless we get a pullback. See, a pullback would help, because a little pullback here would help to, you know, add a little more fuel for the next advance up. Bring in another set of buyers, clear out, you know, let some longs that took the, you know, day traders that took this rip up here, take some profits, and then put a new set of buyers in. That might be a little healthy there. But just to continue on up here and blast right on through that trend line like it's not even there, certainly possible, just not probable in my opinion. All right, so let's get back to, okay, so that's a yes. I already showed you NQ. Yes, I did. We'll go back to that real quick because that's a big one. NQ again, right around that 71.26.50-ish resistance level, a hair above it, with downtrend line resistance not far above that too. You know, I have two alternative downtrend lines. They come in close enough together, and then your next level up there. So you know, whether it can power on up there or not, that's yet to be seen. But I want to show you one more, RTY, small cap ETF. That one is at, and it's just a hair above, so it looks like it's trying to poke through downtrend line resistance plus the 1496-ish level. Call that 1500 if you want to be safe there. A little reaction high that's right above there. It comes in around 1500 or so. So that's it. Now, again, this is a bullish pattern, so I'm not interested in shorting for a swing trade right now. You know, overnight positions, ETFs, things like that I can't control overnight, like the futures. I'm just looking for maybe one minor reaction, and then probably power on through there, possibly later today and or tomorrow. Okay, I know a lot of you don't trade futures, but again, you know, I've you know, IRAs, other accounts where you can't. Well, actually, you can. Interactive brokers will let you short futures, but it's not even worth it because the margin requirements are so high. You can't short stocks or ETFs and IRAs, but again, interactive brokers, they have what they call margin IRAs, where you can actively trade. You don't have the free riding penalties like most brokers will impose on you, and they'll let you short futures. But again, you can use the short ETFs instead. It's, you know, SQQQ 3-time leverage if you're going to trade that, or TQQQ 3 times long. Or of course, I always use the charts of the 1-time ETF, in this case QQQ, when charting. And so what you have here is QQQ is at that downtrend line resistance right now. Now that's also a wedge type pattern, almost a contracting channel, slight wedge shape there. There's your positive divergence still very much intact, and that's again the catalyst for the rally today. And based on the divergences and the scope of these patterns, if we didn't have all the bearish technical developments on the daily and weekly, the daily, weekly, and even monthly charts right now, this would be like an all-in bullish, setup here where I'd be adding, probably a lot more long trade ideas right now. But being that I believe this is a, most likely a bear market rally, then one thing you don't want to do is ever trust a bear market rally. So we can pop it in the levels of work, but whereas 6 months or let's say a year ago or even 2-3 months ago when we came off the lows, this kind of pattern would be taking the market to new highs. It would be taking you back up above there. At this point in time, it's a matter of which of these resistance levels do we stop at. That's really where I'm at. And do we fall shy of the measured pattern for the target? If you have a bullish falling wedge, which this is not really a textbook wedge, but it's like I said, more of a contracting channel, but you just take the widest part of the wedge, if it is a wedge, and you add it to where it breaks out. And see, that gets you right up here to about that 179, 73-ish target, so call it around 180, let's just say. So that's a potential bounce target. And again, that's the full measure target. We may fall shy of that. That's bear markets are cruel to longs just as bull markets are cruel to shorts. What I mean by that is sometimes just as a rally begins to get looking good and it charges everyone up and they're bullish again, and believe me, the headlines will follow. If we rally another 2-3% from where we have so far on top of what we've done today, you'll start to see bullish headlines come out, and the bulls will come back out of the woodwork on TV and all that. It's just how it happens. But then if it is a bear market rally, just as things start looking good and you feel like it's safe to dip your toes back in the water again on longs, 401ks, you dodged a bullet, by not taking your, if you were 100% long, let's say in your 401k account or any account, trading account right here, and you got caught in this, well, you'd probably be feeling good right about here, and that's what a bear market does. Just when everyone's feeling good, boom. So got to stay on our toes here, and but again, it's also a matter of, like I've been saying for days now, that the risk reward for shorting is not attractive when the rubber band is stretched. So this is just one example. There's QQQ up 2.43% right now, and that's the rubber band snapping back pretty strong. So in just one day, let's look at this way. Here's a green candle. So in one day we wiped out yesterday. That as bearish as yesterday was, and the big red candle, gone. Any and everybody that shorted yesterday is wiped out now. They're underwater, and that's why again, that's why I'm more interested in adding longs recently than shorts. But again, you got to be careful on the long side too. So that's that. SPY. Let me show you the SPY 60. I didn't show you that. Well, there's that 280 level on SPY. Remember, it was a big level before, big support level. Successfully held here, successfully held here a couple times. Was also the 3 big reaction highs back roughly around the fourth quarter last year, and that level is most certainly going to, or should, act as resistance on the way up. And again, it's if there's some really strong buying, and they might overshoot that level briefly, but I would be surprised if they passed it and just kept going. And if they do, here's the other thing about it. It's just like that chart on the euro I posted today. That's why I'm a little cautious right now on I'm holding off on adding gold. I showed that the euro has a bullish falling wedge, but then there's a very significant resistance level just above. So that's something else I look for in trading. So we popped 280. Well, great. But then what do we have? We have a significant downtrend line. It's the downtrend line off the recent highs that comes in just above it. And to try to measure it out, this flaw in this charting software, I can't click and grab without moving that line. I want to leave it there, so I'm going to come in a little lower. Well, I'll come in from where we're at. Let's just do that. From where we're at, let's say we get there soon. You're talking about 0.6%, less than 1% up to that trend line there. So again, it's just like on the longer term time frame daily for swing trading, when I was saying the downside, if we do hit, I did last night's video, I showed you about 3% or so, there's some downside on a lot of big FANG stocks. If we hit those, sure, you could short and try to get that 3%, but it's not worth it. The reward is not worth the risk. So right now, to add right here, not the most objective. Again, I'm talking active trading stuff, and longer term, if well, I just don't know what to say to that, because if you think this is it, and it very well could prove to be. I'm not going to sit here and tell you that my views must or will be right. I can tell you I'll be wrong a lot. But if this is the end of a correction and the market's going to new highs and much beyond, and you believe that to be the case, well, here's what you do. If you already bought, whether you did or didn't, it's pretty simple. Just put a stop in place. If this is pretty powerful reversals. You could put a stop below yesterday's lows. You could put a stop somewhere maybe below today's lows. You want to keep it a little tighter. Here's a 200. You probably can't see them well in this video, but I have the 200-day exponential and simple moving average coming in together. And as I said, it's not unusual to see them overshot briefly on a weekly basis. They did it right here. They overshot it for a day and then snapped back above it. And intra-week we got back up above there. So that's another possibility too. Another level that you could use is a stop. But again, so there's really, let's call it a stop range. And I'm speaking to those that want to position long for a multi-month rally or so, maybe even a multi-week rally. Not what I'm looking for. As you guys know, I'm more interested in where to add back some shorts. But we will take longs. As you know that, there's been plenty of longs. Well, not plenty, but several longs on the site lately. Most being non-equity. We had the commodities, the ag commodities, coffee and wheat, and other things like that, and some plenty of unofficial trades like gold and other things. But we added what was it yesterday? KHC. We have the Intel trade still hanging in there. There's KHC still moving up off that divergent low, positive divergence. Intel still hanging in there. Apple they took from us, and that's fine. We can, if I think it's safe, I may jump back in, but I'd like to just see what happens here first today, and maybe how we trade tomorrow. But there's Intel consolidating around that level. Defended 43 like a champ so far, and if you're in that trade, this is a pretty powerful short-term basing pattern. So what I expect from Intel from here, minor pullbacks aside, if we pop, or if or more probably when we pop that level right here. There's been a few brief spikes. You can see small little wicks below there, but when we break it impulsively, you'll know what that is. You know what it'll look like. You'll see a big candle, and we'll hit that first target probably in the blink of an eye, probably within one or just a couple, 2 or 3 60-minute candles should do the trick. Maybe even one candle there, because that's a powerful basing pattern. There's probably a ton of stops on shorts set here, and there's even probably more longs that will buy when that range is popped. And market willing, again, that's going to take the market cooperating most likely to get all the way here to the second or final target. I'll leave that now. But I'll do this often. I may pull this trade in early. Let's just say we rally for another day or two, and tomorrow or the next day, Intel comes up and hits T2, or it's about to hit it. I will only change price targets, any trade parameters, stop loss levels, price targets in advance. Like I said the other day with Apple, my mistake, my apology. It was a snafu. I had that line there on the original post at 174.50, but I had typed in 173.50, and then I used that on the text when I was, wrote stop below. Doesn't matter. Like I said, they took us out brief. They clipped it there. Actually was right here before, because the line was at 174.50. They clipped it there, but it was a good thing, because look, we would have run down and got stopped out at a point lower the following day anyway. So now where Apple is now, and I'm doing this because I'm sure some of you, I imagine some of you gave it a little extra rope. Remember, my trade ideas are just, they're suggestions or charts I'm looking at, things I may or may not be trading personally, but I wouldn't put it up if it wasn't a trade that I didn't like. Whether I trade Apple, for example, right now, and if I have NQ, I'm basically long Apple, and I'm long the rest of the FANG stocks, because that's what's going to make NQ or QQQ go up and down. But as far as Apple goes, you have still very strong positive divergence. Just about all the reasons that I originally put the trade out here, back here or so when it fell to the support zone, are still very much intact, and maybe even a little better, because this looks to be that we had a nice volume bump and a quick move down. That might be a near-term selling climax. I don't think it's the end. I think Apple goes lower in the coming weeks to months, but near-term selling climax. That flush out move clears a lot of stops. Well, they didn't get us on the flush out move. I had to stop a little high there, but that's that. And so that would be a good thing, because it temporarily shifts out the supply and demand dynamics, clears out a lot of those those long that were their stops were hit, and maybe sucked in some shorts on that break as well, and then those shorts will start to get squeezed and cover. So somebody asked today where I think it goes. They asked if we'll go up to 186. I think 186 is probably a better number than my previous first target. 186. I looked at the daily chart, and there's some levels here on the 60-minute chart that come in right around there it is. No, not there. Where is it? 186. More so the 60-minute chart. We have a gap right here. I'm just kind of eyeballing this daily chart. Yeah, let's just leave it at that for now. If you can get in the next day or two 186 out of Apple, that would be a lift of about 4%. To me, with what's gone on in the charts and everything else, I'd take the money and run. The falling wedge pattern I showed you a minute ago. Here's the widest part of the wedge. Just assuming it hits the measured target, it kind of had, let's just drag this line down here and say that the wedge, well, yeah, it broke out and back tested, so we'll call it a breakout and a back test. We'll add that to the breakout point roughly, and it brings us right there around that 186 level. So if you want to know where I think it's going, that's it. And if you believe, like I do, this is probably just a bear market rally with more downside to come, then you don't want to try to milk out every little penny, and you might want to sell a little bit before there, especially if you're heading into a close. That's another consideration for a stock. Like for Apple, for example, let's say you're trading and it's coming up on 186, but at 3:50 p.m. it's at 185 and a half. And your your target was 186. I would sell at 185.50, because then maybe it hits it the next day when the market opens. But if everything gaps down, the futures gap down, Apple gaps down, you'll never get that target, and you would have given back a lot of profits. So there's a lot of variables that go into trading, and that's just one of them. So first things first, Apple, it's a nice little rally today going on, 3%, 3.15, but still work to be done, as well as some of those other trade ideas. So and then finally, IWM, I think I showed you RTY futures. If I didn't, I'll get to those in a second for you futures traders. This downtrend line on IWM has been taken out. This was not a very strong resistance. I just had a couple reactions there, a decent resistance level. It was former support, but kind of sliced through it quite a bit recently. This is probably, I'll move that line up there. That line should be right there, about 150, 111. That would be a potential target, but there's a lot of gaps here to trade around, and each of these gaps are levels that traders are going to be watching, and they can come into play as resistance. See, there's gaps there, some reactions there, another gap. So these are the levels near term on if you're trading IWM, about 149.60 or so, 151.10 or so, and possibly more. Let's just see how today finishes before we go too far, and then maybe how tomorrow starts out. That was QQQ, and I think I already showed you. I believe SPY 60-minute. Yeah, I did, with the 280, and then the trend line coming up. And then finally, on small caps, there's that, see, you have a downtrend line that's it's been taken out. So is the 140s. 1496 just level, but you have another reaction high there. In other words, it's been taken out, but not since we've taken it out, we haven't really moved impulsively higher, and that's because it took a lot of energy to get here. I much prefer to see, and we still may get it, like I said in the beginning of the video, a little pullback first, maybe come back, test the trend line, pull back, work off some of the near-term overbought conditions. Let the day traders take profits, and maybe suck in some shorts, and then that would be the fuel, I think, for a more powerful sustained breakout there, and that could also give you that little inverse head and shoulders type pattern here on the RTY small cap futures. Okay, I'm going to wrap it up here. That's it. Just wanted to keep this one to the indexes. And we'll, as always, when the markets are moving fast, I'll do a closing market update as well. And if anything big happens in the futures overnight, or I see anything that I missed in this video, I'll post an update on the site. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.